Google has been a steady compounder over the last decade or more, and after climbing 170% since March 2020, we've now seen a decline of about 25% in the stock. It's at this point now that we have to wonder where we go from here with Google and whether or not now is a great time to buy, because Google is definitely one of those businesses that everyone wants to own. The issue, however, is that a great business isn't a great investment if you have to pay too much for it. So let's take a look at their Q1 2022 earnings to determine if Google is actually a great investment now that it's down over, $700 since its high in 2022, or if it's still too richly priced. Keep watching to find out as we're talking about that and more on today's episode. How's it going? Welcome to Everything Investing. I hope you're having a great day. But with that being said, today we're going to take a look at Google's Q1 2022 earnings results. We'll do a deep analysis into the financials of the business here. We'll also take a look at the technical setups, and as you can see, down 25% from these highs up here. And then finally, we'll conclude with a valuation of this business to see whether or not this is something we should be adding to our portfolios as retail investors. And if you enjoy the analysis and the value investing perspective, please like and consider subscribing for more of this content. All right, so let's jump into the technical analysis here for Google. And I just have up here their Class A shares. They do have Class C shares as well, but up on the screen is their Class A shares ticker. Okay, so that's GOOGL. So what do we see here? If we actually zoom out, we'll see what I was talking about earlier. I mean, we're talking about this thing has just really increased all the way since 2010. Like, how far back do we, since its IPO? It's just compounded and compounded, and investors have really benefited from picking up shares of Google. Now, the question is this going to be the same thing if we were to buy shares today? Can we expect that same type of price trend in the future, just perpetually increasing year over year over year? That's what we're going to try to find out in today's analysis. But with regards to their technical analysis here, what do we see? Okay, we've reached up to highs of $3,000 per share, and we've been rejected since that price point. Now we're heading down lower. All these horizontal blue lines here are our potential areas of support. So we are approaching our first area of support right here, but it hasn't really been tested all that much. As you can see, it came down here, and let me zoom in just really quickly. We came down to this price range here at about 2,200 per share, and the stock pushed up since then. Then we came down into this price range, 2,500. It was supported for a little bit. Now it's finally broken through. So what we can see here is that we're approaching this level again. So we have to kind of wait and see. Are we going to be supported by this level? What I can envision happening is we get supported, push into here, and we might actually push lower. But that is speculation at the end of the day. So we have to kind of see what is going to play out. The next key level is right here at around $2,000 per share. I can see this holding up as well. And then finally, once we get down here, this is really going to be really strong support down here around 1,700. So we'll see what happens with Google. We are on the way down currently. Are we going to go lower? We could. I don't think we're going to get down to our key level down here. This is our key, what we consider the buy zone. This is our strongest level of support. And yeah, it's going to be down at this $1,000 to $1,200 price range. So yeah, I don't anticipate Google gets down there. But we have to remember, guys, the stock is splitting in July. So this price is actually going to be closer to under $150 per share. All of our numbers here are going to change, but that might actually set up some interesting levels for us as potential investors, especially once the stock splits. So if you do own shares of Google, one share is going to be worth 19 in July. So that's the technical analysis for Google for right now. We want to see if what's going to hold up as support as we have ventured lower from these highs up here. So let's go ahead and just jump into the earnings highlights now, and then we'll get into the financials so we can really see what is going to be a great price point to pick up shares of Google. All right, so let's quickly run through these highlights here. So revenues came in at $68 billion for the quarter. That's a 23% increase year over year. So that's really good. They also beat estimates by $140 million. In terms of their earnings per share, however, we actually missed by $1.14. They came in at $24. So despite earnings coming in at around $24 per share, we did have a miss of about $1.14. And the reason for this, they say, is due to YouTube advertising growth falling a little short of expectations. And they're apparently competing with TikTok, and this is primarily going to be with their YouTube Shorts component of the business, right? And so that's really the reason for the miss. But I mean, these are really strong earnings regardless. $24 per share. You don't see this in many stocks globally. We'll look at the highlights here. What the board of directors actually authorized just recently was a share repurchase plan of up to $70 billion of its Class A and C shares. So, on a stock that's about $1.5 trillion, that's a terrible five. They plan to repurchase 70 billion shares. So effectively, they're planning on repurchasing about 5% of their current shares, as a reward to shareholders. And that's actually a pretty strong benefit if you are a shareholder or a potential shareholder of Google. Now, in terms of their outlook, they didn't really touch on this too much. They just simply mentioned that they do plan on continuing their growth investments. So, with that being said, let's jump into the financials here, guys, and see what is actually going on behind the scenes with Google. Okay, so looking at their revenue breakdown, we have Google Search and Other. This is their main component of their business, bringing in basically $32 billion in Q1 2022, and now up to basically $40 billion in Q1 2022. The next on our list, we have YouTube ads, $6 billion up to $6.8 billion this year. And that's strong growth as well. We then have Google Network, which came in at $6.8 billion, up this year at $8.1 billion worth. Okay. So that's a total for the Google advertising. That went up from 44.6 billion to 54.6 billion this quarter. So when we add everything else up, we get to $55 billion last year, up to $68 billion this year. That's again that 23% increase year over year. If we scroll down here and we actually get to their consolidated statements of income here, we can see what happened with their costs. So as we know, revenues increased by about 23%, but let's see what happened with their cost revenues. And naturally, when revenues are increasing by such high figures, naturally the expenses are going to increase as well. And as we can see across the board, we did have increases year over year. So that increased to about $47.9 billion worth for their total costs and expenses on $68 billion worth in revenue. That leads us with income from operations of $20 billion. Last year, we had $16.4 billion. So a sizable increase there. Now, here's the catch. Okay, last year we had an other income gain of $4.8 billion. This year we have an other income expense of $1.1 billion. So this is what really has construed the earnings results and the bottom line for Google for this Q1 earnings release. And we can see here last year, because of that increase there, they did come in at 17.9 billion. This year at 16.4 billion. This is why we did have that miss. And it's really due to their other income. Last year being a gain, this year it's an expense. Okay, and we look at the shares. We did talk about this earlier. They are repurchasing shares, so it went from 682 million to 667 million this quarter. And it's apparent that that is their main focus in returning value to shareholders. So if we scroll up here, we can see their actual statement, the balance sheet here actually, and we can start with our cash position. Okay, for cash, we have cash equivalents. Last year, 20.9 billion. This year, 20.8. It's essentially the same flat. Marketable securities, they actually bundle these two together to give you a relative, basically their most liquid items of cash. And so we can accumulate these to be 140 last year and down to 134 this year. That is in billions, of course. So if we compare that number with their debt figures, because everything else is relatively unchanged in their assets section, as you can see here, we can move straight to the liability section and try to see what's going on with their debt. Okay, we come all the way down here. We see long-term debt. They have about $14.8 billion worth of debt. And again, if we go back, look at our current cash, and if we just look at our cash figure without or touching our marketable securities, we already have enough to pay down the debt. This is absolutely a check mark. This is great business on the balance sheet. And this is a big part of the reason why Google is something that a lot of people fall in love with, because they just have great business across the board and they continuously grow year after year after year. So let's go to the statement of cash flows here. And let's see what they're looking at with their Q1 2022 cash flow results. Okay, so we bring down our net income figure here, 16.4 billion, add back depreciation, amortization, stock-based comp. I'm going to deduct this from our calculations actually because it does dilute shareholders. And we get to about $25 billion in operating free cash flow according to their accounting. I'm going to deduct $5 billion worth for that stock-based compensation because I don't want to include that in our calculation. Okay, we have to deduct our $10 billion worth of capex here. We get to, let's say, $15 billion in free cash flow for this quarter alone. That's amazing business. Some businesses don't even make that in a year. So let's try to find out what exactly they do with the $15 billion of free cash flow to reward shareholders. Okay, if we scroll down here, we can come to our financing activities and we can see exactly what they do here. It's really their main focus, and as we touched on earlier, it is repurchasing shares here. They effectively use up all their $15 billion worth of free cash flow on repurchasing shares and stock-based award activities. So if we look at the $70 billion share repurchase plan, if they do end up repurchasing $70 billion worth of shares, that's effectively a net benefit of 5%. So if you're a shareholder of Google, your shares are going to be worth 5% more based on their share repurchases, not including the other growth that they have in their other segments. So that's the fundamental analysis for Google. Now let's jump into our calculator to see exactly at what price point we can find ourselves picking up shares of Google for a margin of safety. All right, so jumping into our calculator, we said that the free cash flows here for this Q1 were 15 billion. So if we extrapolate that out for the year, we can anticipate and make a guess here that it's going to reach about $60 billion worth of free cash flows for the fiscal year of 2022. With a 10% required return, they don't pay dividends. We can modestly assume that we can purchase shares of Google at a margin of safety for about $1 trillion. Okay, I don't think I mentioned it earlier in the video, but we're actually sitting at a market cap of about $1.5 trillion. So it would need to come down just a little bit in order to reach your margin of safety. Now that is in a modest and, a very conservative estimate. Now, if we look at an exuberant case where we believe, okay, for the next 5 years, Google can grow at 15%, 10, and the 5 years after that 10% on a 25 PE, we can see this thing up to $1.8 trillion in valuation. And the thing is, Google is on the way down currently, so we might be able to start picking up shares at this current point in time and then averaging down as the price goes lower. Alternatively, you could also wait until July and start picking up shares at that point because the stock will split. I'm sure a lot of retail investors will be buying up Google in droves. So yeah, you could also do that. That could be another strategy, and you might be able to pick up more shares. It's really up to you. It's personal preference whether you want to purchase it now or if you want to wait a little bit and purchase it later. But again, guys, this is for a 10% required return. If we wanted just even 7% return from our investment, then yeah, it's sitting actually about a pretty relatively fair value right at this current point in time. And in the best case scenario, we can actually see this up to $2.4 trillion. So again, it really depends on what kind of investment you're looking for at this current point in time. If we go over to our technical analysis once again, guys, we're down here at around $2,200 per share. This will split, like I said earlier, to under $150 per share if you wanted to wait. Once again, it's up to you. The question is, am I a buyer of Google shares right now? I am not at this current point in time, but I do plan on picking up shares in the near future because I love the fundamentals. I do love this business. The thing is, especially something that I do love about Google is that the audience and the users of Google are always getting younger and younger. And that's a great thing for businesses, especially when we have a long-term mindset on businesses and our investing portfolio. So with that being said, that is the earnings analysis for Google's Q1 2022 earnings results. If you made it to this point in the video, thank you for watching. Please like and subscribe if you like this content. And until next time.